real estate doom loop threatens America's banks. It's grabbing them by the shirt collar and going, "Hey, banks, I'm threatening you."
It does sound almost preposterous, like a ride at Six Flags or something like that. But let's start with the premise of this, which
Would
is...
you go on the real estate doom loop?
Not if it was called the real estate doom loop, but the doom loop, I think it could attract some riders.
Tucker, you a doom looper?
I'm not good with rides.
Okay, you'll watch. You'll
Got
watch.
a lot of motion
Bit of a
sickness.
puker.
Got it.
Yeah, bit
Got
of
it.
a puker.
So let's start with the premise, which is if there are a chain of defaults in the commercial real estate sector, which is not a foregone conclusion. I recognize that real estate values in the commercial space, especially the office space, are way off where they were pre-pandemic. That does not necessarily mean that there will be a chain of defaults. But if there were, I think the real estate doom loop scenario argues that they could be enough to sink many mid-sized banks in this country. And would you buy that premise that in the event of a mass default event, or maybe it's not even a large default event of commercial real estate, that it could sink a number of mid-sized banks?
Maybe Mike, I don't know anything about how mid-sized banks manage their real estate. And let's be honest, no one else listening does either.
True.
Like, none of us actually know anything about what banks are threatened by commercial real estate defaults.
No.
I don't look through every bank's balance sheet to say this one's okay and this... I don't know. And neither does anyone else, quite honestly.
Yeah, and that's what you're describing right now, the fact that you and I don't know, and quite honestly a number of other people don't know either, sounds a lot to me like the lack of understanding and knowledge that occurred in 05, 06, 07.
No.
No, hold on.
My goodness, you're a doom looper too.
When it was talked about
Doom
how
looper.
nobody really understands the value of the assets on these banks' books and what it might look like in the future. I recognize it's a different scenario. It's a different threshold. It's a different size. But it bears a lot of the same resemblance to me.
Talk to me about the resemblance. The only thing is that we don't know, but that's because in most businesses, you don't pay that close attention to it until it's a problem.
Mm-hmm.
But I don't know if that makes it similar. It's more just, hey, no one's been paying attention to this because no one ever pays attention to anything until it becomes an issue.
True. So here's the argument that I will make. Regional banks have picked up a larger portion of the commercial real estate debt that is out there compared to their large bank counterparts. I don't know if that's enough to sink them. But the other piece that goes alongside this is that regional banks are today under a whole bunch more scrutiny from regulators around things like their capital requirements that they were not previously under the same scrutiny until Silicon Valley Bank collapsed. And so those two things combined, to me, do not guarantee a doom loop, but put a higher risk on those regional banks of being able to survive this period of time. And I think it's a bit of an open question if you're an investor in some of those. I don't think you're necessarily through the worst of it when it came to these bank failures.
No, I don't either, but I think that when we look at this, you mentioned some of the similarities. I'll talk about the differences in commercial real estate. Number one, not all the loans come due at once. In 2007, the big issue was you had all this floating rate debt, and it pretty much all adjusted at the same time. It would all adjust every year because it was through the 5-year initial period where a lot of those loans were taken out, or 3-year, however long the initial setup period was. So you had all these mortgages that were adjusting their interest rates upward, and people couldn't pay them. Commercial real estate, what are you typically dealing with, 5 to 10-year loans?
Yeah.
They don't all come due the same year.
True.
It's a rolling schedule, so it doesn't all hit at once, first and foremost. The second piece is that when we look at it, commercial real estate is a really broad term. There's a lot that falls under that umbrella.
Sure. There's medical office spaces. There's apartments. There's shopping malls.
Not apartments. Apartments won't fall under commercial real estate.
Okay.
I don't.
I think apartment complexes fall under commercial real estate.
I wouldn't even define it that way.
Yeah.
But even if you look at office versus shopping malls, there's absolutely no similarity there.
Sure.
And I'm not saying that shopping malls are good in this case, but there are differences in what's going on in the office market today versus what is going on with, a piece of commercial real estate that a small bank has where it's 2 dentist office and a doctor's office off on the side.
Yeah, there's a ton of differences there.
Like, you can't just say commercial real estate and mean anything coherent, whereas, hey, a bunch of, single-family mortgage-backed securities, okay, I know what that means. Mm-hmm. So there's no clarity on what's actually going on here. And I'm not saying that everything is going to be fine.
Hunky-dory?
I said at the start of this segment, I don't know. But these headlines, man, real estate doom loop threatens America's banks. What does that even mean?
Yeah. If you want to be critical of this entire piece, give me a timeline. Give me a threshold where this needs to get to before it becomes a problem. The other piece that I have heard, again, if we're just talking about, we don't really know the details of how this could play out, there are people lining up and raising funds right now
to buy this stuff.
On discount.
Yes.
There is not this moment that we are in right now where there's only one side of a trade where everybody is attempting to sell. We have definitely not gotten to that point.
And so what you are seeing is you're seeing the one-off defaults that are happening, and they are happening at an increased pace. Just as an example from this piece here, and I'll quote from it, Bank OZK hasn't pulled back from lending, but it has started to see some signs of market trouble. In January, a developer defaulted on a roughly $60 million loan from Bank OZK after construction costs escalated, the bank said. The loan was considered relatively safe because it was far below the building's site value of $139 million in 2021. In December, a new appraisal put the property's value at $100 million. Okay, so yes, you are seeing these things that are happening. The bank now has this property, and it's like, what do we do with it? Who wants to buy this from us?
But even in that case that you just mentioned,
it's not going to be. So let's say it's a $60 million loan that they made, which it is.
Yep.
Even if they have to take a further 40% discount when they sell the property,
they're still not underwater.
They still get the money back that they lent. It's just through a sale at a far reduced price.
I keep getting led back to one conclusion about all of this, which is there are probably going to be a lot fewer banks in this country 10 years from now.
Which
every single banking expert that you hear from seems to be echoing the same thing, which maybe actually means that it's wrong.
Right, watch us end up with 10,000 banks instead of 4,000.
But that seems to be the one thing that I keep hearing from everybody in the banking sector for different reasons. And it's tough for me to conclude that we won't go down in that direction. But gosh, can you imagine a less let's say we did get down to this scenario. Can you imagine a less desirable group of people to bail out than commercial property owners?
Less desirable?
Yeah. I mean, I can
Fentanyl
imagine
smugglers.
Yeah, sure. But like, wow, that would that would be a really tough group to come forward and say, "Hey, we need to rescue the banks because they made a bunch of bad loans to landlords."
And it's not that all landlords are bad. Like, there are good ones.
Sure.
But the problem is
they don't carry a great reputation.
No, and even the ones that you would consider, a good landlord, they're usually the very small ones where it's, hey, I've owned this property for 30 years and I don't really care about how much I get in rent as long as you're paying the bill. Like, it's for 1 and 2
Those aren't the ones that need a bailout.
No, those are not the ones causing the problem. Right. It's the ones defaulting on the $100 million loan. And usually those are not the sympathetic ones.
And I know I jumped to bailout pretty quickly in this conversation, so I'm not sitting here predicting or rooting for one. But when we talk about bank failure, which is what we're really talking about if we're talking about a real estate doom loop, your mind kind of goes to bailout, right?
It does.
Yeah.
It does.